Let's start from the higher time frame, and then move closer to where the tension is building. On the 1-hour chart, the U.S. session reference from the 27th overlaps with the Asia session reference from the 26th. The ranges are almost the same, but the U.S. session reference is slightly higher on the upper side. That detail matters, because overlapping references often act as shared memory zones, not decision points. After that overlap formed, price pushed higher and moved through the 20-period moving average, followed by the 120-period moving average. At first glance, this looked like a clean structural progression. But structure is not confirmed by movement alone. It is confirmed by where price holds afterward. When the Asia session of the 27th formed, its reference candle developed above the 120-period moving average. That told us one thing clearly. Structure was still being respected at the 1-hour level. However, that condition did not last. Price failed to remain inside that reference and eventually slipped back below it. At that point, the 1-hour chart stopped giving answers and started raising questions. At this stage, nothing is being decided. And that matters, because when a market is ready to resolve structure, it usually does so quickly after overlapping references appear. Here, we don't see that speed. Price moved, but it did not commit. That tells us this overlap is still being processed, not accepted. So rather than moving forward, the market is still looking backward. And that keeps the story open. The most important question is simple. Will price retest the U.S. session reference from the 27th and hold above it? Or will that level fail and open the door for further structural deterioration? That question is still unresolved. And this is where it's important to slow down, because nothing decisive has happened yet. From the 1-hour perspective, price is still close enough to that U.S. session reference to keep it relevant, but it is no longer reacting to it immediately. That delay matters. Markets that are ready to move usually respond quickly when a key reference is touched. Here, we don't see that urgency. Instead, price remains nearby, moving just enough to stay visible, but not enough to resolve anything. This is often where false conclusions are made, not because the market is deceptive, but because observers become impatient. So rather than focusing on direction, the better question here is timing. How long price is willing to remain unresolved at this level? Because time itself is now part of the structure. And as long as time continues to pass without resolution, this level remains active. And this is where the 15-minute chart becomes relevant. When we drop down to the 15-minute time frame, we don't see confirmation. We see hesitation. After the Asia session completed, price attempted to move higher multiple times, but each attempt stalled quickly. Instead of follow-through, we saw short advances, followed by immediate pullbacks. That behavior repeats, and repetition matters more than size. Now look at the short-term Bollinger Bands on the 15-minute chart. The upper and lower bands are no longer expanding. They are flattening. That tells us volatility is stabilizing, not increasing. And what matters here is not what price is doing, but how long it is willing to stay here. Because structure is not only built through movement, it is also built through time. The longer price remains Inside this holding area, the more information the market is revealing, not about direction, but about commitment. Right now, we don't see urgency. We see tolerance. Price is tolerating this range. The market is allowing this structure to exist a little longer. And as long as that tolerance remains, resolution is being delayed. At the same time, the long-term Bollinger Bands on the 1-hour chart remain asymmetrical. The upper band is still angled upward and open, while the lower band continues to close. That combination tells us the broader structure has not collapsed, but it is no longer accelerating. This creates a different kind of tension, not expansion tension, but waiting tension. Back on the 15-minute chart, price is spending time between the 20 period and the 120 period moving averages. At this scale, that zone is not acting as clear support or clear resistance. It is acting as a holding area. And holding behavior usually appears when the market is reassessing a reference, not when it has committed to direction. So when we put the 1-hour and 15-minute charts together, the picture becomes clearer. Structure has not failed, but it has not confirmed either. Right now, price is still inside the story, and the next chapter has not been written yet.